Hello, ladies and gentlemen, Greg Bukowski from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs, the Euro versus US, the dollar versus yen, and sterling versus US dollar. Today's date is March 27th, 2024. Let's get started. I'm back from my long weekend holiday, and on Friday I recall that the price closed right near the 61.8% retracement. That is of the move up from this low going back to February to the high price that we saw in the month of March. The 61.8% retracement came in at 1.08036, and the price closed just above that level. It was also just above this swing area going back to February as well, where we had a number of different swing lows and swing highs in this area right through here, mostly developing that floor right here, and the price came down into that area last Friday and also in Monday's trade, but could not sustain any further momentum to the downside, breaking below the 107.95. That was the next target to get to and through. Couldn't do that. We saw the price move higher on Monday back toward the 50% retracement and 200 day moving average up. That was a key target as outlined last Friday. That we needed to get to and through on the top side. We moved above and below it on Monday and Tuesday's trade. We also moved above it, below it in the Asian session, and before we started to use the level as a support, final support here before moving to the upside during the European session yesterday. That moved to the upside, got above this 100 bar moving average. That's the 100-hour moving average. We are on the hourly chart here, and move back toward the 100-day moving average. That's this blue line right through here. Also a swing level going back in time as well, near the 108.65. So things kind of progressed in the fashion that you'd expect. We couldn't get below this level. We started to move higher. We moved up to the 50%, 200-day moving average, moved up to the 100-day moving average, so on and so forth. Before moving back to the downside and trading here today, we are back below, or yesterday we actually moved back below the 200-day moving average of 50% retracement. And in trading today, the high price, as you can see, came up to test the 100 bar moving average, and that 200-day 50% retracement level found willing sellers against that level. And as long as the price can remain below that level, and it has, the price bias has shifted back to the downside. So this is more bullish, this is more bearish, and that's what we're seeing in trading today. So watch this level right here now as resistance. As long as the price can remain below that level, the sellers remain more in control, with the 61.8% retracement and the swing area down here as the next key target for this currency pair. Let's take a look at the dollar versus yen. This pair reached the highest level going back to 1990 in trading here today, breaking above the 2022 and 2023 high prices. The 2023 high price came at 151.909. The 2022 high price came in at 151.945. Can't see it, but well, you can. It's this number right here. That's that horizontal line at the top side. And trading here today, the price high going back to our hourly chart moved up to 151.967. So got about two pips above the old highest level going back to 1990. That was during the Asian session. The price rotated back to the downside on the failure to incite additional upside momentum. The price started to fall lower, and when we fell back below the 100-hour moving average, that's a blue line in this chart, we started to see increased momentum to the downside. That tilted the bias a little bit more. You had some proof that the sellers were taking more control back below that tactical level, and the price rotated toward the low prices that we saw toward the end of last week through here and here and here. Here, the next target comes in against the 200-hour moving average. That's this rising green line right here. Also, near that level is these swing areas, these swing highs through here. Remember, these were the ceiling area going back to February and early March, where the price had a number of different swing highs through here. The last time it was right here before the market started to rotate to the downside. That area comes between the 157.18 and 150. 938 and the 200-hour moving average is between those levels at 150, looks like 75 or 76 or something like that. But this yellow area is where we have to get to and through. Now, on the top side, what we don't want to see for the sellers looking for the high in place on the failed break to 1990 highs is a break back above the 100-hour moving average of 150, 1.428. As long as the price can remain below that level, The sellers remain more in control in the dollar versus yen, so keep that in mind. Finally, let's take a look at the sterling versus US dollar. We're looking at the 4-hour chart. And trading last week, the price fell below the 100-day moving average. It's blue line of the chart. It also fell below the 200-day moving average. That's a green line in this chart, but the momentum to the downside cannot be sustained. The price closed right around right in between those two moving averages. And trading on Monday, the price came down to and through the 200-day moving average. That's at 125.903. Could not sustain the momentum. It started to rotate back to the upside and trading up on Tuesday, and I guess Monday as well. The price moved back above the 100-day moving average, the blue line in this chart, but could not sustain the momentum. We have since moved back below that 100-day moving average. And in trading here today, the price moved up to retest the level right here, only to find willing sellers against that level. So as long as the price can remain below the 100-day moving average, the sellers remain more in control. On the downside, we look toward the 200-day moving average and this swing area through here between 120.94 and 126.137 to be our barometer for bullish above, bearish below. If we move below both these levels and stay below those levels, the sellers remain in control, and we look for further selling pressure, perhaps down toward this low right here and this low right here at 125.34, 125.17. Also, of course, we need to get below the Friday lows right through here to increase the bearish bias for the sterling versus US dollar. So there you have it. A look at 3 of the major currency pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.